So Simon's asked a question, and it's a good question, Simon. Do you ever deal with trust in your technical analysis and patterns? You know, you see some patterns you're familiar with, but then it goes against you. This influence. This influence is quite hard on my abilities for technical analysis. I mean, on my confidence on my technical analysis. It's a good question, Simon. And there's two answers to the question. The first part is, or maybe it's they're intertwined. When you see a pattern, here we have a pattern on the SPY. 1, 2, 3, 4. I'm expecting this to go another move up 5. And so if I was trading calls on this, I'd be watching this to hold support, bounce higher, 5 waves, then I'd be at the top of the channel. I'd look to sell. So I'm trading with conviction. That's my first thing. I see a pattern, I believe in the pattern, I trade the pattern. So I trade it with conviction. I take a position on that pattern with a view that it's going to resolve the way I think it will. That's number one point. The caveat to that point is that your patterns at best are going to be 70% successful. They're not 100%. They're at best they're 70. If you're trading an iffy pattern, it's 50-50. And a lot of traders, when they ask me a question about a chart, the pattern quite often it's not even there, and their trade actually is a 33% chance. 33% chance it goes up, 33% chance it stays even, 33% chance it goes down. Now, trading this pattern here, I mean, this isn't the pattern. I wouldn't be looking to buy it here because this is already 1, 2, 3, 4 waves. And, you know, the fifth wave generally is not as big, and sometimes it's truncated, so it could roll over. But I'm just using this as an example of a pattern that I would trade. This big roll up gives you the channel line, pulls back, that gives you the other channel lines, takes off. This is wave 3, wave 4, and now looking for it to go to wave 5. But it's only 70% successful. That's why we have stop losses. So we have 3 kinds of trades in the turbo trading room: small loss, small gain, big gain. And we get big gains because we identify a pattern, and it's that 70% chance that it does work for us, and it goes, and we stay with the pattern because we know what it does. There's the 30% chance that it breaks even for us, or it has a small loss. And that's how it works. So the more you read the charts and the more those patterns work for you, the more confidence you're going to get, for sure. And so, but only trade your strong charts. Only trade your strong ideas, your strong patterns. Don't trade patterns that are a 33% chance of success just because you think you've got a gut feel, or your emotions have said this really looks like it's going to go up. The pattern has to tell you in which direction it's going to go, up or down. Whether you're long or short, we don't care. But when you identify those patterns that work, then you trade those patterns with conviction. That's what I do. I put in orders, and I know that they're not all going to work. Only 70% of them are going to work. I track my trades. I'm about 68.9% successful in my trades. So right at 70%, right where statistically I think my patterns should be, 70%.